What's happening, everybody? Ian Walsh here, Hard Money Bankers, joined for another day of open mic with my partner Ryan.
Yo.
On Ryan. We this today actually was my total stupidity. So I thought that when I set up today or whatever, I looked at my schedule real quick and it said we had one of these appointments, and then a little closer it was something else I was invited to at 1 o'clock to do an appointment with somebody else. So basically I just had an open schedule here, and the lady that canceled yesterday, who's very nice, said, hey, would you like to do it today? And I said, no, we're booked. So then I screwed up. I screwed up twice. It's fantastic. I was like, so
we could have had someone.
Yeah, she rebooked, but yeah. So
Cool.
yeah, what's going on with you? Anything exciting?
I mean, all these interviews, a lot of them are real estate and successful people. But really, I feel like you're a source that people would want to learn from too. So if you're open to it, I'll ask you some questions as a lender. You're an industry expert as well. So let's get your insight if you're down for that.
All right, people want to hear what I have to say a little bit, or we're just between the two of us. One of us wants to hear what I have to say. How about that?
Mm-hmm. There's at least one person that wants to hear it.
Let's do it.
All right. So I asked this question yesterday, actually, right before Jesse joined in. So let's start off with that again. So is it a good time to invest right now, to start investing, whether you're a new investor or not?
So right now, actually, this question would have been really different like 3 or 4 weeks ago as the market was tanking. At the moment, though, I still stand by what I said, which was, if you've never bought a property before, it's a really good time to see like what pros are doing to get through this. Good learning experience, because up until now, you really only watched a bunch of the market climb. And you really, whether you realize it or not, you couldn't have learned as much as you could in a moment like this for the people that can survive it. So if you're brand new, I'd say let this thing stabilize a little bit more. Let's make sure that, there isn't another leg down. As I say that today, the market sells off heavily. That's how I would look at it. As far as like seasoned pros, yeah, they never have the intention of stopping. And just because they're buying doesn't mean that you should, as like a non-seasoned pro, be like, oh, I'm missing out. Like, you're not missing anything. The market hasn't given you that fire sale yet, so you're not missing anything. It's just the seasoned pros they just buy all the time anyway. So the between those two types of people, I would say that would be my answer.
I mean, that's a really good point that you just said, that because during this, people think like, I got to buy at the bottom. Now's the time to buy, right? Even if I don't know anything, I got to buy.
Right.
So, you're basically putting the air of caution out there, being like, hey, don't worry about buying at the bottom or anything like that. Right now, focus on following the pros, seeing what the pros, like learning from the right people is what you want to be doing. And if you are a pro, you're just business as usual for you.
Right. And it's not, you're not going to miss anything. Let's see. Deborah says, if you do dollar cost averaging, it's always a good time. Thanks, Deb. But as far as like the buying end of it goes, the moment when that fire sale happens, you will know, the world will know, because you don't want to, everybody will be terrified of real estate. And that's when usually you're at the bottom. We're just not there. People are still like, oh, I can't wait for that bottom. It's just not there yet. We might not get it out of this move. It's possible we definitely might not get it. But in the event that we do, it'll be pretty clear, because you're going to not want to, most of the newbies won't want to be around it. The pros will be all over it.
Mm-hmm. Okay. All right. So next question here. What are the pros to starting now, though, and the cons as well? So it's tailing off of what you're just saying, but if you can kind of specify, like what's a pro to starting right now versus 3 months ago?
So a pro would be the people that you're going to watch in the business that are currently doing business are typically going to be more of a chance that they're not going to be somebody that's just going to blow hot air at you and tell you, things that they didn't learn in the last, that you kind of cut out of the shills. The shills are gone. So you have a little bit more of a clearer path to information for the professional investors that are currently around. I'm not saying they're all gone, but there's a little bit more, information clearing for people that have not invested before to get to the people that have and understand and really look at what like good buying looks like, what deep buying can look like, which is a good insight that you really want to see, because a lot of people don't realize, I mean, you would agree with this too, that, people can't believe the deals that we see every day. It's like, how'd you buy it that low? Like we see those every day. This isn't, so it's very rare that we see a deal that we're like, this is the greatest deal I've ever seen. I think I can count on like one hand how many of those kind of deals I've seen in the last 5 years. Mm-hmm. So, and of the hundreds and hundreds that we normally, do, you're talking 5. So it's a very low percentage. Right. Can you copy and paste Jamie's comment to me?
What's up, Jamie? Yeah, I think that's his page again. He is taking advantage of our marketing that we are asking people. Yeah, so you're good to go to that. I can send it to you again. So he was here yesterday. This video is going to go out to 100,000 local members, and we're offering our platform out to anyone in the industry, free marketing. And Jamie's doing it. Jamie's doing it right. So Jamie, thank you for taking us up on this offer. I can't believe more people aren't doing this, but you are. So you will be rewarded.
And be rewarded with my share screen and my control click. Anybody looking to buy or sell their house? Jamie's your man. As I control click forward. And you can also check out his Facebook page. So Jamie, thank you. I think you can see the information right. Should I zoom in a little more? There we go.
Yeah, that's good.
That's good. Cool. Appreciate that, Jamie. And good. So what was your next question, Rap?
Well, the next question just came in from Jamie. How do you guys feel about real estate investment funds? Is there a good ROI?
So my question, what do you mean, participating or putting it together? That there's a huge difference, and yeah, depends what you're using it for. So Jamie's question up says, how do you guys feel about real estate investment funds? Is there a good ROI? What is the fund being used for? Are you putting the fund together? Are you managing the fund? In what capacity are you asking? Because each one of them has its own participating. So what kind of fund is it being used for? My normal instinct towards having other people manage my money is no, because ultimately it's my responsibility for whatever happens to my money, period. So if I lose it with a fund, that's on me, even though the fund lost it. If I lose it with, by myself, I lost. So it's always on me. I take that responsibility. Giving somebody else money. Yes. You see, is there a brand? I see commercials on CNBC. Personally, this is a personal answer. I would never be giving my money to anybody on that. Like, I believe in knowing your investment better than anybody in the world. So whatever you really know better than anyone else, that's personally what I find investing in is comfortable and safe. So I know hard money. I know it better than anybody I know. So I'm comfortable putting my own money into that. Maybe you run a business, Jesse's on here, and what's up, Jesse? And Jesse runs a business in El Paso. If you said, hey, Jesse, I need you to invest 10 grand and turn it into 20, he wouldn't give it to a fund. He'd invest in himself in his own business and turn that over. So I'm a very big advocate of knowing your investment vehicle better than anybody. As soon as you start giving your money over to a fund, you're in the hope and pray mode, whether you know it or not. And that's a scary place for me personally. So I am not a big fund guy. With that, it also depends on your tolerance though. So like you might have, $100 million. If you have $100 million, you want to allocate 5 or 10 million of it towards funds or, whatever. You can afford to lose that money, right? It's insignificant on your bottom line. If I had $100,000 savings account though, and all I have is $100,000 savings account, and I handed all that over to a fund, it would get, I would sweat. That would make me sweat, for sure. I don't like to sweat. So, there's Jesse. Yeah, Jesse, that's exactly how you do it, man. So
cool. Good question though, Jamie. If you got any more, fire them out. All right, so I'll keep going here. So, yep. Any lending changes for you?
Since COVID?
Since COVID, yes.
So I would say like the overall underwriting procedures, we look at the asset, the character, the whole picture is really what we're looking at. That really hasn't changed in the way that we evaluate things, but what has changed are probably the asset values in the end, because we've been hedging against the possibility of a market drop. So what an ARV pre-COVID or a comp pre-COVID isn't necessarily what a post-COVID comp is going to be. Now, the problem is with that, we don't know, nobody knows really what those comps are until they come in. And they've started to a little bit. So during our underwriting during COVID, we hedged saying, you kind of have to go, all right, statistically, what's possible in a market drop, and stuff like that. So the underwriting and so forth has not changed. We're still, continually lending. It's just what you think in ARV and what I think in ARV probably differed post-COVID. And that'll restabilize itself here over the next 3 months as everybody's privy to the accurate information, right? So that's where it is.
Cool. All right. What do I need to get started with you right now? Is there anything different that I need to get started with you?
So, no, I mean, I honestly, it's probably, so far as different, it's probably less. Like, honestly, I don't want to don't send me a bunch of documents. It's just the easiest thing to do is send me the information on the asset you're looking at, address, renovation costs, how much you're buying it for. I mean, I'm really focused on the asset. I'm a real hard money lender. So that makes a huge difference. Like, I don't care about your W-2s and tax returns. I don't even know how to read half of them. But I do want to know, what the asset is worth, and I'll determine that, and that's why I'm able to do what I do. So getting started, I'm just a guy this morning that asked for a pre-approval letter. I said, no problem, have it over to you in an hour. An approval letter is when you're trying to submit an offer. I said, as long as I agree with the deal. So he's like, you don't need to pre-approve me. I said, no, if the deal's good, I'm in. If I'm not, so he sent it over, and unfortunately, within like 5 minutes, I go, I looked at the deal. I said, this isn't a good deal. So I said no. But if it was a yes, I would have just sent him an approval letter, and then bang, you're approved. So that's how it is. It's not a complicated procedure with us. We keep it simple.
So let's dig in a little bit to what you just said, because maybe that person was new, or they're trying to learn what you are. What made that a bad deal?
So I like to be in areas where, in my particular market, where the resale values are over 120,000 in the potential resale value, because that's where the owner occupied market is for the most part around me. And I want to be, as a lender, in the owner occupied market. Now, I can go into a whole lot of depth as to why that's the case, but just understand that I don't really want to be in an area where there's like a bunch of more rentals than not, because rentals typically resell you could buy them today, put a bunch of money into them, you're still going to resell them at the number that you bought it for today, because landlords, that's what they're after. They're not after the upsale to an owner. So I want to be in those areas where FHA is very dominant, and FHA is very dominant in the $120,000 range, resale range or higher. I can do a loan of 10 or 20 grand. That's fine. But, as long as it's against a property that has the potential to resell on the open market at 120,000 or higher.
Yeah, I mean, I think well, first let me ask, is that different than pre-COVID, or is that all the same?
All the same.
Okay. So I think what you did just mention there, because I obviously get this question a lot as well. When people come in asking for, saying, hey, I'm gonna make this a rental property, right, versus a fix and flip, they don't realize from a lender's perspective, there's a pretty big difference in the numbers I'm going to give you based on what you're trying to do with that property. So yeah. I think you were just touching upon it as to the why. I guess I'm just kind of breaking out a little bit. When you are doing a rental property, a property you're trying to rent instead of sell as a fix and flip, your end value is just not as high as somebody who's selling it to an end home buyer. So look at it almost like if you were to lease a car, right, or buy a car, I should say. If you were buying a car, the moment you drive that off the parking lot, the value goes down, right? It's kind of the same with a fix and flip versus a rental. A rental is you drove a car off the parking lot, its value goes down. A fix and flip is you're buying it at the parking lot.
That's a good way to put it. That's the easiest way to put it. So that puts perspective on it for people trying to figure that out. Let me interrupt this with a very fantastic comment by Jesse Briggs. Mm-hmm. Ian, are you tanning? Your Irish skin is golden. Jesse, I am, and thank you for noticing. Let me see if I can get I can't get a comparison because I'm too tan all over. I can get a.
I mean, I'm a pretty good because we have very similar skin tone, right?
Yeah.
So this is the lean your side. Yeah. This is the non-tan version of Ian.
Yeah. So my answer to you, Jesse, is yes. So for those that don't know, about a year and a half ago, I had developed some sort of allergy to the sun where I could only go out in the sun for maybe like 5 minutes at some point, and I would just break out in hives.
Couldn't golf anymore. Couldn't do it.
Couldn't golf. Couldn't do anything. Forget about the beach. Yeah, it was crazy. My whole body. So I started to realize I was like, this is not cool. I can't go outside. That's a weird thing to think of. So I really went on a journey to understand nutrition and what's possibly causing this. This isn't just something I was going to lay down for. And as I got deeper and deeper into it, I really got deep into it. Nutrition, you rot from the inside out or you heal from the inside out. It's your choice. And I really went down a journey with it. And the reason I am tan is because A, it's awesome that I'm tan, right? But B,
you can go outside now.
Because I could go outside now. I healed my allergy via nutrition. So, and vitamin D, the true reason I'm tanning, because I don't really, I'm not going to the Jersey Shore to do t-shirt time, right? So, but the real reason I'm tanning is to gain vitamin D. It's the natural way to gain vitamin D. And if your body's prepared to receive vitamin D with the other nutrients, which I've made sure that I put in my body, you can tan. And it's just every day I'm thankful when I'm out there that I'm like, and I try to get out there every day if possible, that I can be out here right now and not be filled with, hives and irritated and itching. So that is the long answer to your tanning question, Jesse, but I had to answer it without, saying, hey, I'm hitting the tanning beds, dude. Like, it's not my thing, but whatever. So anyways, yes, Jay. Yeah, man. Vitamin D is real, dude. Vitamin D is you need it. It's vitamin A, vitamin D, vitamin K2. Don't even get me going on this podcast, man, but you need them all in synergy with magnesium. And that's where our indigenous ancestors were meant to be around. People that don't eat meat, you're in trouble. You have to eat meat. There's a million things I could talk about on here about this, because that's a whole separate passion I went down. But yes, vitamin D is more than just what Trump said we should be injecting vitamin D or whatever the hell he said. There was actually something to it. He wasn't crazy. Vitamin D is actually extremely important to your immune system. So, but I feel better, stronger, constantly healthier than I ever have in my entire life. Probably also helps that I stopped smoking, drinking, and but besides that, so anyways, yeah, Ryan, did you have any other questions?
Yeah, I mean, we got a few more minutes, right? You mind?
Yeah.
All right. So this what's the best way to make the most money during a recession? Is it, or not a recession, but whatever the hell we're in right now? Nobody knows what to call it. Is it a recession, a correction, whatever? Is it fix and flip? Is it wholesaling? I know everyone's going to have their own niche, but I guess in your opinion, what is the largest gap, bang for your buck right now? For what, because you've seen it all. You've done property management, you've done wholesaling, you've done things, you've done everything, right? So do you have just a personal opinion on, hey, if you're in this area of the market, it's probably strong during a correction like this?
Well, during a correction, it's safer to be in a rental property until the bottom is in. It just is, because your primary exit strategy isn't to sell it. And when you're in a crashing market of some sort, figuring out that top sales price is unknown, and you're in a weird, it's a tough position. So, renting a property is going to be technically safer at this moment. It doesn't mean run out and go buy a bunch of rentals. It just means that if I were to buy a property right now, a rental might be a good, I'm deciding between the two. It doesn't mean you can't make money with either, but you've got to adjust faster and harder to a flip than you do with a rental at the moment, because the rental has like longer time span. You could have 3 or 4 months, let the market settle out, and then you can make a decision. Whereas like a flip is like you buy today, you're trying to sell it as fast as you can. So cash flow things that don't require like a short time limit would be your better avenues of, outbound or initial investment stuff.
So non-time sensitive items are probably a little bit, I don't know, safer, I guess.
Yeah, 9 time sensitive items. Okay, so Jesse is a good question. A follow-up question by Jesse. Where does one start in real estate? For example, a martial arts guy looking to buy land, commercial real estate property. So, Jay, so first of all, right, we got to get Jesse some swag. We got to get him some swag because he's just tons of and we got to get Jamie some swag too. So Jamie or Jesse, if you could, I'll put my email in the my email's under my name. Just email me your address and size, and I'll send you guys some free shit. So, but as far as your question, Jay, is like real estate is like a very big topic. So there's, you can be an expert in commercial real estate, expert in residential, expert in landlord, expert in flip, expert in subject to, like whatever, expert in lending. So it really depends on, I tell people it really has to do with your personality. So you can make money in any avenue of it. Like you can make money in any shiny object they put in front of you. But the reality is certain ways that those processes work are more suiting to certain personalities. And I've seen over the years where people succeed and fail in both. So like if you tend to be, non-detail oriented, you don't like processes, and, you tend to need like bigger hits of money to satisfy your personal needs of mental satisfaction, being a landlord is probably not for you. Whereas like flippers, it does tend to suit a little bit better because they make like 50G, 100 grand on a deal. And whether they want to say it's about that or not, it is to them. So find out what your personality suits and then figure out what investment strategy you want to use. How would you get into it? I mean, I could tell you the way I did it, the way I got into first thing I would do is wholesale if I really had to start. So wholesaling would be like my number one area to start because that's where I started, and I learned everything from there without taking on a lot of risk. So wholesaling, and I learned it on forums, like online forums. The one that I learned from specifically is no longer around, but there's some really good ones out there still, like Bigger Pockets. Has a lot of information, but wholesaling is a really good spot to start and a really good spot to end. If it can be your end game for sure. I mean, I know a wholesaler that makes a whole lot more money than me. So that's where I would start, but you really have to like break down the subsect of what fits your personality and then decide from there what's going to go. They all work, all the avenues. Like once you start getting into it, you're going to see all these shiny objects. Like try this strategy, do this strategy. Just remember 2 things. 1, buy low. I don't care what strategy you're using. Buy really, really, really low. Everything else can work itself out. And then 2, choose an exit strategy that fits your personality. And between those 2 things, you can find success if you're really getting good deals. So hopefully that helps.
Hey, that's a pretty good answer. You gave a direct response saying start wholesaling. That's your starting point. Yeah, the rest will kind of show itself and pick it based on your personality.
I was fortunate looking back to have started there. That was by luck. Well, no, not by luck, by design as well. I didn't really I didn't have the money to do it any differently. So, but if you have like money, don't use that money I always tell people, pretend you don't have it, learn to make it in this business without money, and then you'll know what to do with that money.
I mean, I know you have a hard stop in 2 minutes here because you have another interview to go to, but that kind of rolls into what Ethan just posted. So we can end it on his question here.
Cool.
Would you recommend subscribing to a paid group to learn the REI or use that money to do it on your own? Really good question. We get that all the time, actually. So
yeah, I would say when you're starting, like for sure, you pay. I mean, I don't know how much these groups cost, but most groups are like $1,000 or less to like be involved with for a year. The good ones around here. Anything that's like more than that, I start to maybe like think about. But anything under $1,000, like go for it. You're not going to use that money to get anywhere in like buying a deal anyway. Like that's not going to get you.
I mean, there's programs out there that are like $10,000. I would probably steer clear of those. I think you could put that $10,000 to better use.
Yeah, depending on what you're getting. I mean, too, like I would say that would be like step 2 or 3 in your education process when you know what you're looking for. But initially, when you're just starting, like anything $1,000 and under, it's an investment in yourself. Some of them will be better than others, whatever, but it's negligible. Like the money is zero. Like it's zero. That's free. That's a free scenario. Take it. You're not gonna get into this business for under that. So it's going to be your best spent time and effort is figuring out your local markets, REI groups, and so forth for sure. And there's some really good ones locally. I don't know where you are, Ethan, but there's some really good ones locally. So hopefully that answers your question. So guys, I have a hard stop today. I appreciate everybody being here. And I will send, and Ethan, if you want to also email me directly your size and address, I will also put you on the swag. We'll send you some cool stuff and you can have it. So that's pretty much it. Appreciate it, everybody.
Yeah, thank you. Ian. Appreciate it.
Yep. All right.